Hello guys, glad to have you on board again today. Just wanted to make a real quick update before leaving for some vacations. So for those who've missed that information, I'll be off probably until the 10th or the 12th of July. But the specificity of that trip is that this time I might be off network activity for more than 24 to 48 hours at some points. And in that perspective, you know that regularly, even if I go down some vacations, if the market moves in any way, I'm always following the market, even on vacations, which means if something really odd and unusual were to happen, I'm always going to jump in on the socials and kind of give you short-term updates about what the next most probable scenarios are, where are the speculative areas and stuff like that. So it's not going to be the case that time. So if something unusual happens, I won't be there to react. So don't go crazy. That doesn't mean I'm dead or whatever. It's just I'm going to be off the network and unavailable to process those information for some time, a 48 hours span. So account for this. That's the reason why I want to record something today, though don't call it a shot or whatever. But you knew my latest plan was to wait for a fucking third range boundary to build itself, either on cryptocurrencies and as well on the stock market. We're doing them right now, and they're actually already closing and detected by the algorithms. They are detected as reversal patterns, so okay, we'll see about that. I'm going to go real quick explaining that, well, that's a very interesting speculative area, so whoever wants to trade that third range boundary, go ahead. The risk limitation isn't staggeringly great, because if we zoom in here to see, we have a squeezed channel, so don't be dumb enough to put a stop loss of that size. That means the market lacks of volatility, and therefore pay a bit of attention to this, okay? That means don't go safe. This is not a safe stop loss, okay? So at least double, I would say a stop loss would be a safely put below the higher time frames context in here. So go easy on the position sizing if you're trading that third range boundary. Right now, the signal means it would be a bullish third range boundary, so it would have decent probabilities to find its way into breaking the previous market tops. That's it. The thing is that I'm going to go real quick, and don't ever dare trading these things alone, okay? But I wanted to give you a bit of a more advanced kind of expert trading information. The thing is that this is the third range boundary in this pattern. There's been another one in here. I would disagree with the indicator in here who prevented the reversal of the context. So no way, it reversed it afterwards. But I would definitely disagree. In here, I think it's just been 99% complete for a reversal, and just the one missing remaining percent just prevented the algorithm from reverse. So anyway, in my personal opinion, here is the second third range boundary. Okay, and the first one in that process was in here, first, second, third. Okay, so this one was neutral, this one was bullish, this one got to its target and again broken, so this is going to be hell of a resistance. This one was bullish and reached its target, so it's not going to be a resistance. I'm giving you the conclusions. Don't try to understand, and don't ever try to use it alone, okay? But this is the thing that I'm doing real quick, okay? I'm talking to you just like I was talking to professionals. So the thing is that 28 is not going to be a resistance. It might be in the first contact, okay? So understand that right now, if this one is validated and confirmed, if it reached out its target, I'm going to tell you real straightforward, this is the end of this bear market shit, okay? The thing is that if we align three third range boundaries real quick, okay? They are here, damn it. Okay, they are here, here, and the third one is, oh, perfectly aligned, gosh. So the third range boundaries are aligned, okay? There are non-converging trend lines around them. So this is a pattern that experts know. This is the end of the market. At least this is where there is a very low risk point to maintain pressure on that third range boundary. So if this one holds on, I think this will mark the end of all that things. The intermediate resistance we have means 28K and alike, or nearby, is going to be a first resistance on the first test, but it's going to be easy to recover. So the message is, I'm going to go conclusions, okay? So what that tells me is that if we have a bullish third range boundary on the last one, and if this one validates and confirms, so to this, we're going to have to go back to the previous market top. If we go there, boy, whoever is going to be dumb enough to sell, going to take some hard hits, okay? No one sells anymore. This means the sellers will stop selling for a long time now. But that doesn't mean the market will surge or whatever. It's a matter of supply and demand, okay? No one is going to increase supply artificially by short selling the market anymore, okay? Whoever is dumb enough to sell now is going to suffer the consequences, and it's not going to be pretty. Second thing, it's all about demand, which means there's no one bidding right now. The sentiment is crazily destroyed. No one believes in everything, and the Fed meeting is far away from now. So in that perspective, the thing is that as there's no bidder, but no one sells anymore, there are two things. Either nothing happens or the demand goes back in. Okay? I think the market cannot go anywhere lower now. And I have severe confidence in what I'm just saying here. There's no odds to go lower now, or very limited. But that doesn't mean the market will go up. Okay? So we could just be trading at the same nearby prices 10 days from now. But there's also a chance, if for some whatever fucking reason, some good things happen elsewhere, I don't know, a treaty between Ukraine and Russia, or whatever, if for some reasons the market goes risk on, when I'm not there, no one is selling. There is not absolute single supply available until 28,000. So hear me clearly. If there is an external catalyst that brings back up the market into risk-on mode, it's not going to be pretty. Okay? Because this is an absolutely uninteresting area until 2800. So that's a 45% price up increase. So what I'm getting you guys ready about, if you wake up someday with a Bitcoin taking 25% or even more, don't think this is a rational move and this is the perfect rebounds for you to sell and take your profits or whatever. If for some reasons demand goes back in, this is the end of the bear market. Believe me, hear me well. These structures with aligned third range boundaries on massive supports on higher time frame is not something you want to play with if it plays itself. The bears are no longer trading these markets. So if demand goes back in, it can be very, very stupid and therefore very volatile. And the next available resistance is going to be 2800. But most importantly, 2800 is not an area for you to sell. Like I said, it has been a bullish third range boundary who reached its target. So what it tells me is that we will take over that level as support without having to retrace very deeply. There will probably be some retracements, but we're never going to get back there again. Okay? If and only if demand goes back into this market, it's not going to be pretty. Okay? But first and foremost, needs to validate and confirm that third range boundary. Right now, we're trading it. It's not yet validated. So don't go down this road of, oh, Phil looks very confident, I'm going to buy whatever. I'm just getting you ready because I'm going to be off for 10 days. And 10 days from now, I will nearly be surprised if we were trading 28,000. So I have to get you ready. The structure is very dangerous for the bears. So my message in here is, most importantly, if for whatever reason you think you are rising too quickly and this is a good opportunity to sell because whatever shit fucking analyst on the internet tells you this is rising too quickly, this is just a dead cat bounce or whatever good opportunity to sell, don't be dumb enough to do it. Okay? If we break 22,000, if you have any trade below that price, okay, just put a stop loss at the low and let it live. Okay? Probabilities for us to go lower than that means we're going to have to go buy 28K first and build a strong resistance out there. Odds tell me this is not going to happen. And we're very likely going to recover 28K as a support over the future, after probably some retracement and so on. The likeliest outcome to me, and hear me well before I leave you guys, is not to do this as a straight line. It requires an external catalyst. But, well, the market has gone so dumb, so just a little bit of a good news right now could fuck it all up, okay? But without any external factor pushing some volatility, the likeliest outcome is to do this very quickly, very slowly and painfully. There could be some downside attacks. So if you're dumb enough to put that trade at break-even too quickly, you might just be pushed out of this game. But understand that right now, as long as these level holds on, there is no single resistance until 28K. Okay? So don't ever get confused or whatever it is to just release your trades until we get to 28K. Okay? That's really what this is all about. That doesn't mean you don't put a trade without stop losses, okay? And as the trade is squeezed out, I would recommend a stop loss right here is conventional enough and good enough to handle this. You have far more than a 1-to-1 ratio. So like I said, don't be too greedy, okay? A stop loss out there for a target out there is very well worth it, okay? So please, guys, be smart. Don't try to get rich quick. Don't try to think that just because I told you third range boundary alignment, whatever, you're going to get rich very easily or whatever. I just told you what I told to other professionals. The bears are now weak, Very weak, very weak. This is the best possible time for the bulls to try terminating the bear move. That doesn't mean they will take over control unless they have an external catalyst. That is the message, okay? So if for whatever reason the market goes risk on again, stock market as I like, there's not going to be a single resistance between 28K, okay? So don't ever listen to any motherfucker who will tell you, take your profits now, the market is going to collapse. No, 28K is the next level and it's going to be easily recovered as a support depending on how long we take to get there. That's it for today. See you guys around the 10th or the 12th and get ready to navigate these things all alone. The message is don't try to get rich quick, but if it goes up, don't be dumb enough to be convinced that you have to release the trades or sell, okay? This is not going to be a dead cat bounce. If the market recovers out of this level, this is the end of this wave. Okay? Bye, guys.